Okay, let's proceed to 4-2.
So for number one, sir, which of the following does not pertain to a statement of cash flow? The answer is D, sir, because it is the only option that does not pertain to statement of cash flow, as the other four options are stated in the standard as to the information and the beneficial uses of information provided in the statement of cash flow, which is number 4 and number 5 respectively as discussed in the book, sir.
Okay, but class, if you that's correct. But if you read letter E, class, it still sounds like a correct statement. Okay, and this is how questions are going to be made, class. The incorrect choice will not always be a wrong statement, class. Letter E is still a correct statement, but it is simply not pertaining to your statement of cash flows. If you will read letter E, class, it actually pertains to your income statement. Letter E is a true statement with regard to your income statement, but it is false with regard to your statement of cash flows. So this is what I want you to take away, class. Ha? Your goal will not always be to look for the false statement. All statements may be true, but that might be the odd choice simply because it does not pertain to the item that being described in the question. So is letter E correct in saying that useful in checking past assessments? That would be correct if we were talking about your income statement. But if we're talking about your statement of cash flows, then that is wrong. Okay?
Number 3. Which of the following is not considered as a cash flow from operating activities? Letter E. Cash flows relating to the sale of an item of plant that gives rise to a gain or loss that is included in recognized profit or loss.
How then should it be treated?
Investing.
Yeah, again, if it involves long-term assets, class an item of plant, the easiest way to understand here is a factory plant, class. Okay? A factory building. So if we're talking about long-term assets, again, it is an investing activity. And again, this is how multiple choice questions for cash flows will be constructed, class. You will be given enumeration, and all that is asked from you is to identify whether it is an operating activity, investing activity, or financing activity. So make sure to master the classification of the cash flows, class.
Which of the following is not considered as a cash flow from investing activities? The answer is C, because everything is investing while C is operating, and
That's
anything related to income taxes is primarily operating activities unless related to income taxes.
okay. Income taxes primarily is an operating activity, unless if you can determine the related cash flow from which it arises. So number 5 is Charlie.
Number 7. Which of these is not true? Our answer, sir, is B. The effect of exchange rate changes on cash and cash equivalents held or due in a foreign currency is not reported in the statement of cash flows. It is false because it should be reported in the statement of cash flows in order to reconcile the cash and cash equivalents at the beginning and at the end of the period.
Okay, so that's correct. So another takeaway, class, would be that the rest of the choices are true. So make sure to absorb the concepts or the points stated in the other choices, class.
So for number 9, sir, which is not among the required disclosures of PAS 7? It is E, sir, because for the other options it is stated in the standard, but as for the letter A, according to the standard, sir, it is only encouraged and not required.
Okay, so very good. Okay, it's important for you to know, class, which ones are actually required, which ones are encouraged only, and which ones are not required at all. Class number 9 would be considered already as a difficult question, class. If this comes out in the board exam, then only students from USC would be able to get this one, class. Okay, so please take note of this one. This is already considered as a difficult question. This is not among those that should be part of your stock knowledge already, because this is a very detailed part of the standard already. But at least at this point, you have already encountered this as early as now. Okay, thank you, Group 2. Let's proceed to Group 3 for 4-3.
So for number 2, sir,
Yeah.
so for IFRS purposes, cash advances and loans from bank overdrafts should be reported in the statement of cash flows as letter C, financing activities, because bank overdrafts represents borrowing, and bank borrowings are generally considered as to be financing activities.
But for bank overdrafts class, the best answer here would be operating activities because normally bank overdrafts are already part of your cash management policies class. And as discussed in the videos, if it's part of your cash management operations or activities, then it would be part of your operating activities. The best answer for number 2 class would be alpha, operating activities.
Number 4, sir. An entity purchases a building and the seller accepts payment partly in equity shares and partly in debentures of the entity. Our answer, sir, is C. This does not belong in a cash flow statement and should be disclosed only in the footnotes or in the notes to the financial statements. Because, sir, it does not involve a cash transaction in acquiring these assets.
Okay? You would also be asked class to determine whether a transaction is a cash transaction or a non-cash transaction. And if that's the point in the question class, that should not be difficult. Okay, it's because it's very easy to identify whether or not cash is involved. Here, please understand class nga, it does not mean that you acquired or bought something automatic there is cash. In number 4, indeed, you purchased a building. And what did we say, class, if it's a purchase of a building or a long-term asset? Normally, it would be an investing activity. But did you use cash to buy the building? The answer is no. You you acquired it by using two forms of payment. Number 1, by issuing your shares. The previous owner of the building becomes a part owner of your company. Number 2, you issued a debenture or a promissory note. So definitely no cash was involved. So this should not be part of your statement of cash flows. Number 6,
How should gain on the sale of an office building owned by the entity be presented in a statement of cash flows?
number 6 pertains only to the gain on the sale, not on the entire proceeds of the sale. Number 6 pertains only on the gain on the sale. So the answer number 6 would be Charlie class. If it's a gain or loss from the disposal of your long-term assets, it would be an adjustment on your net income. But it's understandable that you would not be able to get this right because this would actually involve preparation of the statement of cash flows already. Okay, if you're using the indirect method, you start with the net income, but you should understand that your net income is not composed only of inflows and outflows. It involves accrued income and accrued expenses because again, we follow full accrual in the preparation of your financial statements. So again, if it's the gain only class, it would be an adjustment to your net income to determine your net cash flow from operating activities. But if we were talking about the proceeds from the sale of the building, then definitely it would be segregated between investing and operating. But again, I emphasize class, number 6 focuses only on the gain itself. I hope that's clear to everyone.
Number 8, sir, to achieve a reasonably objective basis, financial forecasts and projections should be prepared, 1, in accordance with CAAP, 2, using information that is in accordance with the plans of the entity, and 3, with due professional care.
The answer in number 8 would be Charlie. 1, 2, and 3. This can be considered as a very difficult question already, class, because this involves a detailed portion of the standard already. Okay, so it's understandable that you will not get this right the first time.